All right, let's get right into it. If you're looking to invest in the future and all the amazing technology that's changing our world, but you feel a little lost, you are in the perfect place. We're going to break down a super simple but really powerful strategy to own the future of tech. You know the feeling, right? You hear about some hot new stock on the news, everyone's talking about it, so you jump in. And then what happens? You're glued to your phone, watching the price bounce all over the place. It's just a total emotional roller coaster. It's stressful, it's risky, and let's be honest, it rarely works out the way we hope. But what if there was a totally different way to do it? A way where you could invest in the entire tech revolution? We're talking AI, cloud computing, cybersecurity, the whole shebang, without having to guess which single company is going to be the next superstar. Well, you bet there is. And it only takes 3 simple investments. So here's the game plan for today. First, we're going to talk about that classic beginner's dilemma and why ETFs are the perfect solution. Then we'll get into the fun stuff, our 3 pillars: hardware, software, and security. And finally, we'll pull it all together so you can see how to build your own tech future. You know, the biggest hurdle for new investors is just getting drowned in all the noise. There's always a new hype cycle, a new next big thing, and trying to pick individual stocks in that environment, it's pretty much a recipe for anxiety and, well, a lot of expensive lessons. So what's the smarter play here? It all comes down to something called an exchange-traded fund, or ETF. Now, just imagine a shopping basket. But instead of eggs and milk, it's filled with dozens, sometimes hundreds of different stocks from one specific industry. The magic is, with just one single purchase, you own a small piece of everything in that basket. And the perks of this approach? They're huge. First, you get instant diversification. You're not betting on just one horse to win the race. You're betting on the entire race itself. And that, of course, leads to much lower risk. If one company stumbles, it doesn't sink your entire investment. But maybe the best parts? You can stop trying to time the market. You just own the trend and let it grow. And hey, if you're still not convinced, get this. Over a decade, the average hedge fund manager, the pros who get paid millions to pick stocks, they actually underperform the market by 40%. Seriously, let that sink in. If the absolute experts can't consistently beat the market, why should we knock ourselves out trying? ETFs let us win by simply not playing that impossible game. Okay, on to our first pillar, the hardware. This is the bedrock, the absolute foundation of everything. Think of it as the picks and shovels of this digital gold rush. We're talking about the super powerful semiconductor chips that are the one non-negotiable ingredient for everything from your smartphone to the most advanced AI on the planet. So our first ETF is SMH, the VanEck Semiconductor ETF. And just look at that performance, a 65% return this year alone. That's because this fund holds the companies that are actually building those essential chips. Now, you might see expense ratio and get nervous, but don't. At just 0.35%, all that means is you pay about $3.50 a year for every $1,000 you invest. It's tiny. And check out what you get with just one click. You own the absolute titans of the industry. You've got NVIDIA, the undisputed king of AI chips, making up a huge chunk of the fund. You've got TSMC, Broadcom, AMD. All the heavyweights are right here, bundled together in one simple package for you. This analogy is just perfect. Instead of trying to guess which single miner is going to strike it rich, you're investing in the companies that are selling the essential tools, the picks and the shovels, to every single miner out there. It's a much, much smarter bet on the success of the entire gold rush. Okay, but hardware is really just half the story, isn't it? A powerful chip is just a fancy paperweight without instructions. It needs a brain. And that brings us to our second pillar, the software that actually makes all that incredible hardware useful. For this, we're looking at IGV. This ETF focuses on cloud and application software. Rocking a solid 28% return this year, it basically captures all the companies that are cashing in on this massive global shift to the cloud. Every single time you hear a business say they're integrating AI, you can bet these are the companies that are getting paid. And again, just look at these household names. You've got Microsoft, the absolute giant of business software. You've got Oracle with its databases, Salesforce, the undisputed king of customer management, and Adobe, the powerhouse behind all things creative. These are the companies literally building the digital world we all live and work in. So here's the really crucial part, how these 2 pillars fit together. It's simple, really. If SMH gives you the hardware that makes everything go, then IGV gives you the software, the brains that allow it to think. When you put them together, you've got the digital bloodstream of our entire modern economy. So we have the hardware, we have the software, but there's one more absolutely critical piece we need. As our world gets more and more digital, protecting all that digital stuff becomes completely non-negotiable. And that, my friends, is our third pillar, security. To cover this base, we're going to look at CIBR, the cybersecurity ETF. This fund is all about investing in the companies that are on the digital front lines, the ones defending our data and our infrastructure from constant threats. Cybersecurity isn't a nice-to-have anymore. It's an absolute necessity. And the market for this stuff is just exploding. The cybersecurity industry is projected to be worth over $300 billion by 2028. And honestly, that number might even be on the low side. Think about it. Every new AI model, every new cloud server, every new connected device, that's just one more thing that means to be protected. This quote just nails it. The great battlefields of the future aren't going to be fought with tanks and planes. They're going to be digital. And the prize isn't land, it's data. The companies inside CIBR, well, they're the modern-day armies and fortresses protecting our most valuable digital assets. Okay, so we have our three pillars: the hardware, the software, and the security. Let's take a step back and see how they all lock together to create one simple, powerful, and totally cohesive strategy to invest in the future. So let's recap, nice and simple. SMH gives you the chips, the hardware. IGV gives you the cloud, the software. And CIBR gives you the protection, the security. These three funds create a complete, self-reinforcing tech ecosystem. And by owning these three, you're not just buying a random collection of stocks. You're getting complete exposure to all the most important tech trends shaping our world: AI, cloud computing, big data, and digital defense. It's a truly comprehensive tech strategy, all done in just 3 simple steps. And this really is the biggest takeaway. We need to shift our whole mindset here. The goal is no longer to be a stock picker, it's to become a trend owner. Technological innovation is a force that only compounds and gets stronger over time. And by owning these broad, powerful trends, we allow our wealth to compound right along with it. And that's really the question I want to leave you with. Why spend all your time and energy trying to find that one single needle in a massive, confusing haystack when you can just buy the whole haystack? This is simply a smarter, less stressful, and way more powerful way to invest in our shared technological future.